Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'm hanging out over here at the Alpha Commission Discord with my friend McKay over from his YouTube, TA with McKay. And I'll have a link both to the Alpha Commission Discord and McKay's YouTube in the description of the video below. So, welcome to Alpha Commission, McKay. And I guess I'm also going to be starring on TA with MK. So I guess I should say thank you for inviting me as well.
Well, before we move on, I know you really want to say it the real way, though. You want to say TA with okay. So just get it out of your system
Yes,
real
I
quick.
do. I love the little South Park reference there. So TA with MK, you know. But
Yep, yep.
yeah, so McKay actually specializes in a little bit more of an educational format. He helps people learn, what is the CPI data, right? And maybe what are certain types of setups, or how do you use certain types of exchanges. And so I thought that it would be a good idea if we just did a co-video where we just shared our thoughts. Maybe I asked him some questions about getting on to this new exchange that I've heard about recently that's been getting a little bit more popular called BitGet. BitGet is not sponsoring this video. We are not taking any type of money from BitGet. I'm not going to be giving any type of links to BitGet that could give me anything. So, guys, just understand that we're just doing this out of our own curiosity because BitGet, I guess it's legal for Americans to use, which is really important, when we're starting to talk about how regulation is growing in the crypto sphere, right? So, guys, when you are using these different exchanges, sometimes they can just freeze your accounts, or you can lose your money, or you can, some weird things can come up. Maybe you need to prove your identity. And some of these exchanges, as they get strapped for cash, you might end up getting locked out, like of Celsius or whatnot. But the good thing about BitGet is that you don't need a VPN. So if you do just register through it, even you can just be completely transparent. You don't have to feel like you're hiding anything from them. They're registered with the US government authorities. And so this is a way to potentially do futures trading and leverage. So what have you explored on BitGet so far, McKay?
Well, one thing I want to throw out really quick, it'll only take about 10 seconds, is I just want to apologize to your viewers. My viewers probably already hear this all the time, but if you hear this little squeak sound every now and then, it's that my little $2 Walmart chair that I sit in. There you go. Do you hear that squeak? That's all. I just want to apologize. That's not Sky making any weird sounds. That's me in my chair. So, but to get to your question, BitGet. Now, Sky had mentioned this to me maybe like 2 weeks ago, I think, when we first talked about it. And the biggest thing is that it's U.S. friendly, which I think you just mentioned. But if you didn't, I'll mention it. I usually use KuCoin primarily, just because that is another exchange that's U.S. friendly. But when he mentioned BitGet, like he said, it's always good to have a few different exchanges that you can use or keep your money spread across, just in case something terrible happens with one of the exchanges you're using, or you're locked out for a period of time. But what I have found so far, just as a simple answer to your question, is that it's very user friendly. I would almost say it offers more than KuCoin, actually, from what I've seen, and I haven't really dove real deep. This video, we're going to talk about futures, and so I kind of just dove a lot into that aspect of this platform. But just looking across the platform overall, it offers basically the same things that Binance do. There's ByBit. I haven't dived into that one a lot, but it seems to have similar things to that. Definitely KuCoin, it measures up to, and I would say possibly could exceed. So, so far, good review so far out of it.
What do you like better than KuCoin on BitGet?
Well, one of the things we'll talk about. So, people have heard of the concept of paper trading, or just making trades where you can see, in real time how you would be performing in a trade,
It's like
but not
practice.
risk
It's practice without.
practice trading. And they have that on here. They don't have that on KuCoin that I've seen, unless I just haven't looked around close enough, or if they've added it in the last few weeks or a month or something. I just haven't noticed it. But this, yeah, when we dive into that aspect, this actually has practice trading on it. So you can see if you're any good before you risk your hard-earned money, right?
Right, which we recommend to everyone. Guys, you might know that I've said a couple times, at least on my YouTube channel, that I don't really do leverage trading. I'm very much an intuitive trader, and that's difficult to balance when you're on leverage because I think for leverage it really requires a certain level of discipline, really sticking to the plan. Otherwise, you can get absolutely wrecked, right? But being primarily an EMA's trader and doing longer swing trades, there's a lot more flexibility built into it. Whereas, with leverage trading, because of the amount of leverage that people often use, maybe a little bit higher than they should, carefully managing every detail of that trade and sticking to a technical plan and trading purely on the facts, not just instinctively, is really important. I believe. Is that what you find?
Oh, I 100% agree. In fact, I'll even add to that like every good or decent, or we'll call it experienced at this point, if they've been in the industry for a while, leverage trader, at some point back at the beginning got wrecked. You've heard that term, obviously, and the reason is because there wasn't as many options, a few years ago as far as practice trading, as you say, which is why I would say recommend trying that because leverage can be very scary, and that's why we're going to talk about it today, and try to hopefully make it something that you're comfortable with by the time you watch the whole video. But yes, I would say that most anyone can tell you a story that they've screwed up at leverage trading and lost a decent amount of their portfolio or a decent amount of money. And so we want you guys to avoid that, of course.
Right. And what level of leverage do you find easiest to manage, or to be relatively safe? Like, where do you draw the line? In terms of you wouldn't want to go over X amount of leverage if
So
you
that,
were kind of beginning. Just consider for a beginner.
well, for a beginner, I would never use over five. I don't ever use over 10. And when I'm using 5 or 10, it's always almost, sorry, it's almost always Bitcoin. Because to me, Bitcoin's the easier one to manage with that higher bit of leverage, just because it doesn't move quite as rapidly as the altcoins do, obviously. You see a 5% drop out of Bitcoin. What do you know what that equates to out of an altcoin, or a small cap coin or something, right?
Yeah.
So 5x is what I would say if you're beginning, never use over, but I would actually recommend, especially when you're practicing, practice with 2 or 3x. 3x is what I use the most. So
So, would you mind just putting a, chart on, like just clicking onto the futures area, or just showing us a chart? Just kind of change the background up a little bit, maybe get
yep,
Bitcoin
yep,
on
yep,
there.
yep. We're gonna go before we hop into that. This is the first useful thing I want to just quickly explain to you. Now, there's a section that says USDT-M futures, and then there's coin-M futures. The first thing to understand before you even go into futures period, and this is on all exchanges that offer leverage, if you're trading, this is the underlying asset that you're trading with. So in most cases, people like to trade with their stable coin, which is, in this case, USDT is what they offer on BitGet. It means that you're risking your USDT in the trade, or so if you lose money, it's going to be your USDT, or if you gain money, it's just going to be your profits are going to be USDT, right? And futures coin means you're trading with an asset. So if you want to, say you have a bunch of Bitcoin in your account and it's a bull market to where you kind of like the idea of holding on to Bitcoin, even when you're not in a trade, because you think it could go up over the course of, a month. So if it was a swing trader like you, for example, and it was a bull market, which we're clearly not in right now, you might want to trade with this one because you could trade with Bitcoin into a different asset and your profits would just go back into Bitcoin. Or if you lost, whatever, it's just taking out of your Bitcoin or whatever you're trading with. So hopefully that makes sense. Now we'll click on futures, USDT, because I think that is the safest one to trade with during a bear market, of course, because when you're not in a trade, you want your money hopefully as stable as possible. Right, Sky? Stable as possible, I guess. We've learned recently that UST
Yeah,
never
not
really thought
all
about that.
not all stable coins are equally as stable,
Right.
right? But one
Right.
of the reasons why you might want to, get into futures trading, right, or what people call leverage, is because you can also trade against the market. You can short the market, and this is something that's not possible in spot. And so you can technically do 1x. You can do 1x on BitGet, right? I haven't explored
Yes, you
the.
can. Yes, you can, which is just the same as buying something spot long. But yet, like Sky just said, you'd have the option of doing that same thing, but in a short position.
Right.
But
So
go on.
if we're in a macro downtrend, then most of the coins on average are going to find themselves with lower prices. And so, if you had started at shorting at the top of the market, even if you had only used 1x leverage, just one times, not doing any extra risk whatsoever, and you just basically inverted the charts or whatever, you could essentially trade the same way as you could in a bull market but to the downside while shorting. And a lot of people don't realize this when they ignore leverage, when they ignore futures in the beginning, thinking that it may be more complicated than what they're ready for. I totally understand that feeling. I developed my trading strategy just on spot. And so to switch your trading strategy and then also try to, put your brain, wrap your brain around a totally different method of trading, it almost feels like you're starting from scratch. And for those of us who have, gone through a lot of hard work to develop our trading styles and, become regularly consistent and good at it, switching that stuff up can feel like you're just starting from scratch, But I think when we're talking about bear markets or when we're talking about any type of bear trend, even during just regular markets, learning to short and learning how to use leverage in, a downward, in downward momentum can be beneficial for you because then you can also make money in a down market, not just, trying to pump everything to the moon. Those who are only looking up, who are only saying up only, I think a lot of that comes out of a place of not knowing how to control, trades in a down market, right? Or maybe not even being good at trading spot in, in a down market, because probably on average they're losing. But the reason why the reason why bears, right, the bears that we all hate, exist is because they can make a ton of money shorting the market. So, are you primarily someone who shorts? Are you primarily a bear, or are you primarily a bull? Okay.
Well, that would be relative to, I guess, the time frame that you'd ask me. If you're asking me right now, I'm a little bit of both because I do think that we've been in a bear market a while, and I'm hoping that end of the year potentially. We all have our targets as far as dates of when we think things could get better, and we won't know until it's here, right? Well, we won't, not saying we'll ever really know for sure, but anyway, right now I'm a little bit of both. If you asked me a year ago, obviously when everything was going up, yeah, I was a perma bull. I have no problem admitting that. And maybe 3 months ago, when Bitcoin was seemingly only dropping, was a perma bear. So I do have a tendency to let my emotions kind of follow what's going on, which is one of the first things you have to learn to master in trading. And I don't know if you've mastered it. I haven't personally, so I have no problem admitting that. And if I have emotions, I try to just stay out of trades altogether. Because that makes it a little difficult to trade if you're feeling perma bull or perma bear. It's usually going to mess with your
So I have
judgment, so
to
to speak.
Yeah, I have to admit that as well. I only recently managed to gain total control of my emotions on these trades, maybe within the last, I don't know, 3 to 4 months. But there were just times before that, and it took a long, long time to master this. It was a slow progress, but even at the top of the market or when we first were dipping down, I always had like an intense feeling that just spiked along with my decision making process, and it colored my perspective. It colored it biased me in how I approached trades until I finally learned how to filter that out completely. And I'm proud to say that I'm finally to the point where I don't feel any emotion when I look at the chart. I literally just don't feel anything. I look at it like almost like math homework now, where it's just like some boring task that I need to do to get the reward at the end, right?
Right.
And
I'll add two things. I'll go ahead. Go ahead. So keep going.
Oh no, and I was just gonna say that, and from my perspective, I definitely back you up in terms of that. Don't go beyond 5x if you're a beginner on leverage, and I would even throw out there probably 3 to 5x was just my perspective, so very close to yours, and in terms of a maximum, I would say probably a maximum of 20x, even if you get to be pretty good at it, because again, like we never know when our emotions can just spike up, and then you can easily get wrecked very fast, especially if you're doing leverage on those altcoins, which McKay was mentioning. So I'm really glad that you mentioned that. It's an important warning for new users of a leverage in crypto.
Yeah, and I'll add to that too, just to piggyback on the back of that thought, that if you're new to leverage, it's going to even be harder to control your emotions, because now you're basically, the idea of leverage, just in case this whole concept's new and you're watching this video, is you're trading essentially with money you don't have, right? Like, you are turning a certain amount of money you're trading with, whatever that position size is. So say you're trading with $100 and you're using 5x leverage, you're basically trading with a position size of $500, which only 100 of it's yours. You can't lose any more than your $100. You'll never lose more than that amount you're putting in. However, now you're going to see the fluctuations of 1% equal 5% in that case. And if you're not already good at managing your emotions, imagining them when Bitcoin drops 2%, and that's 10% for you in your position because you're 5x, longing it. So that's one thing. And then, one thing my mentor always used to say is you have to learn to trade like a bot. And I think that's exactly what Sky is saying, as he's been kind of learning to master his emotions, is that he's starting to realize, hey, I just need to take my emotions out of this and just imagine that I'm just the bot that was told I need to buy here because it's what my TA told me to do, and sell here because it's what my TA told me to do. And everything that's happening in between of this price action that can get scary, just ignore it, right? Would you agree with that?
Yeah, absolutely. And one of the reasons I don't do leverage trading, obviously I tried it a while ago, and just I messed up so much. I was so undisciplined. For example, even a year and a half ago, I could easily make a ton of money and I could easily lose a ton of money. And one of the reasons why I just totally gave up on leverage trading is because I didn't want to do it until I managed my emotions. And again, one of the things that I just wanted to underscore is that you don't have to just go completely out of it the way that I did. Maybe a lot of you out there, probably the majority of you, got kind of wrecked in crypto your first round of trading, right? And your first cycle. And you may have lost a lot of money and you just kind of are put off by it totally. But again, you can do leverage with just 1x, and just to be really reasonable, be okay with that, half percent gain, on whatever your x is, and just make a certain amount of percentage, right? As opposed to, trying to go for all those 10%, 20% moves, trying to get rich quick. And, if you lower your expectations and if you just, use a really small account size in order to effectively lose money with, like, learn how to lose money, right? And if you learn how to lose money in a responsible way, then when you're able to start to make money consistently, then you should be able to manage your risk. And I think there's a lot of technical nuance that goes into this, such as risk management, which maybe would be a cool episode to have another time. But why don't you take us and walk us through the process of how you get started and how you do leverage in, particularly in BitGet?
You bet. Now, the last little thing I was just going to add to what we've been talking about before we dive in
Sure.
is one thing that I want people to kind of think of when they're thinking of trading with leverage is, I don't, at least this is just me personally, I guess. I can't say this is something that every trader will tell you, but I don't think it's wise to trade with leverage when the market is volatile, because it's harder than when, I mean, you might make more, but I feel like there's more luck involved. If there's swings happening because CPI data just came out, for example, and you're having swings that are crazy to the upside, then to the downside, and the big wells are trying to liquidate longs and shorts. It's just harder. Leverage offers you the opportunity, number one, to short, which is what Sky said clear back at the beginning. That's not something you can do on regular spot trading, and you could still use 1x leverage. But it also gives you the ability when the market's very boring and, Bitcoin, for example, is trading within a small range to maximize your gains on little 1% moves, right? So if you are new and, and you're getting into crypto, just keep that in mind, that I think that's when it's the most useful. It's not as useful when things are just going up, or just going down, in my opinion, because at that point you may as well do the safer bet and just spot trade, right? But anyway, so as far as just the overall interface here, I was on the main page before I clicked on that futures like we talked about. You do have charts in here you can use, but of course, most of us would just use TradingView or Coinigy or something. I don't chart my coins actually on here, even though I just did while Sky was talking. That's not, of course, what I would normally be doing. I would have a whole nother chart up where I've decided where I want to enter a long or a short position, right? But I didn't want to have to pull up a chart for this demonstration. So here you go.
But it
So
is
down
nice.
here,
It is nice that they do have the trading view chart. A lot of exchanges just have like stupid, charts that you really can barely do anything with. But this is a trading view integration.
yeah, it has all the same features. And actually that was something that while we were talking, this was my first time messing with it. And so, yeah, I was able to kind of notice what you just said, that, hey, this is actually more useful. I was going to initially say these are usually not, but I can say that's one more perk, I guess, to BitGet, is that, yeah, it does have a pretty good interface for the charting system. Now, as far as if you were going to open a position on here, the key things to know is over here on the top right where it says cross. I'm only going to briefly explain these things, but you have two different kinds of leverage you can do. You have what's called isolated and cross. The difference between the two in a simple matter is cross is whatever you have in your, however much USDT in this case you have over here in your account. So down here it says my account equity is $202, right? And 8 cents, some odd cents. If I'm say opening a position size of $30 out of that 200, I'm not risking just that $30. If I have cross, I'm risking potentially the entire $200 because it will try to save my position. As long as it's open, it will bleed into my overall money.
So
So you're actually,
this is a really important point to like really hyper underscore, right? So
yep,
just mention which one was that again?
that is cross. And I don't, and before we even go on, or before you give your thought, this is the one I'd say beginners you need to avoid.
Exactly.
Just to start out. Yep,
That's
avoid
what I
cross. It's
just
how,
wanted to underscore that. Yeah.
yeah, if you're going to get wrecked, it's better to just get wrecked in that whatever you put into that position, which, like I said, is the example $30. I open up a position. I only want to lose that $30, right? I don't want to have $500 in my account and I didn't know what I was doing, and suddenly I just lost all 500. That would be devastating to most people, right? To lose your entire futures. So, and then the second thing to know is cross is if you do get more experienced, or you're eventually down the line you are good at leverage trading and you want to open up some more lower leveraged longer term positions, so the type of stuff that Sky teaches on his channel as far as more swing trades, where you can maybe possibly hold on to something for at least a few days to weeks versus just a few minutes to hours, like what leverage trading usually is. It actually it averages out all of your positions. So if you have multiple positions open, so say I had a long going on Bitcoin, Ethereum, and Matic all at the same time, right, Sky? Well, if one's up 10%, one's up 5%, and the last one's down 15%, and they're all the same exact position size randomly, that would actually cross amongst them all and be even, right? Because I'm up 15% between the other two, and I don't know, down 15% between the one, and it averages them all out. So your winners can help negate your losers in that case. Does that make sense to you?
Yeah, absolutely. That's the real benefit, once you get into the swing of things.
Yep. And then isolated, which is what I would recommend 125% for beginners to use at first. This is just each position acts as its own position. They're not tied together in any way. So if you had that same example where you had 3 positions open and one was down, ended up getting liquidated, which we'll talk about in a minute, what that actually means. I know it's a word people have always heard, and it's a very scary word. But if you have a position that, God forbid, gets liquidated, then at least it's just that one position with maybe $30 versus if you had 2 other positions open, of worth a certain amount of money. So that's the one we'll start with this example. Over here on the right, this is where you're choosing your leverage. Now this is different versus like KuCoin. I think it's even different than I used to use Binance. Of course, we all know part of the reason we're making this video is this is US friendly, and Binance no longer is, even with a VPN. So of course, we're trying to find different exchanges, and that's what brought us here. But on Binance and KuCoin specifically, you just choose one, and it applies to your longs and your shorts. So when you're brand new to this, be careful, because the very first time I was just practicing with this, after SkyFi recommended downloading it, I was trying to short a coin and I didn't realize that I had changed my long leverage to what I wanted. I put it to like 5x, for example. And I was just putting like $10 in a position, nothing big anyway. But all of a sudden I look down and it's got this crazy liquidation price that's way too close. I'm like, what the heck? I realized, oh, it's because I didn't change the short to 5x and I was actually shorting. So that's another tip for you. We're going to change them both to 5 since that's usually what I use when I leverage trade, just so they're set there, right? And
Yeah,
then
it's
just kind
not
of get
really
comfortable.
it's not really a coincidence they set it to 20x by default, right? Like the maximum that I would be willing to go, you know? Like they really want you to lose your money on their platform, you know?
Yep. And I feel like that's actually a pretty common thing among all these leverage platforms. I don't notice
Right.
that to be any different.
Yeah,
But
that's
yeah, they
a
want
like a
someone's
default.
inexperienced to screw up, right?
Right. They want you to lose that money. So again, I'm just underscoring some things because we're just having a dialogue here. But yeah, probably the first thing you want to do is switch to isolated instead of cross, and then you want to put your leverage down to 1x, you know, on both of them, just so if you accidentally do something stupid, you're only, you're only at the base value, and then you can decide what you want to move it up to from there. You know, once you get some practice with 1x, maybe 3x, and then maybe 5x as a beginner, right? You don't want to start at the default, right? So hopefully these little tips are going to save you from a big mistake when you're trying the first time.
I 100% agree. And then this next section, which will be another thing that Sky will probably want to, underscore, is that when we're talking about limit versus market as far as opening up a position, there's a different fee between the two, and depending on your position size, that can make a big difference. I don't notice it to make a huge difference, but basically limit, you're choosing the exact price that it should fill your order at, and your fee is actually less. And then market, it actually, that just basically means, in fact, we'll even just read what it's, I don't want to read, that's too much words, but it basically just means feel it now, right? Like, I don't care what the price is. So imagine if the market was volatile, and now with Bitcoin's obviously not, as volatile per se as like an altcoin, but it still can be. Let's just say it was fluctuating because some crazy news just came out and it drops 5%. And then 5 minutes later or 2 minutes later, it's up 5%. You hit market, you thought you were buying this price right now of 20,412, right? All of a sudden you look down and it opened your position on a short or something at 20,480, which is $70 difference in price on Bitcoin, which, depending on your leverage, could make a huge difference on you're already in the red before you've even got started. So that's another one. Besides recommending isolated to start and what he said as far as these 1x, don't make sure it's on limit, and just don't even worry about market. I never open or close any positions with market personally. And so maybe just take that as it is and just do the same. Don't even bother with market. Use limit, right?
And part of that is tied to your risk reward calculation, right?
Correct.
So when you're choosing your entry position, so for example, if you went long, right, like right at the apex of that diamond at the bottom there, I guess it's not really apex, it's the bottom, but like right where it bounced off that middle corner where it makes that kind of that L elbow, right? Maybe you,
Right here.
yeah, whatever. That's your higher low anyway, right? So you got a
Yeah,
higher
yep.
low, and you wanted to enter, just say right there, and you just had in your mind's eye that it was going to hit that point, right? So how would you first of all go about looking for that point, or what would you do to just determine your entry price?
Well, again, I chart this on a different TradingView on TradingView itself, but we've charted this up for you guys. So here's my little line of support. Let's just say that you'd been tracking this, and you saw that we put in this higher high over here, right? Back on middle of July. Well, I guess this is the hour chart, so I was just earlier, a couple yesterday or something. But anyway, I forgot how zoomed in we were just now. But you have this idea that, hey, I think it could bounce off this previous support that that it had lost, and maybe that's a good spot, and you wanted to open up your trade. So you're looking at that as 19,600. One other little tip too is never use even numbers. They're less likely to get filled, especially if you are trying to front run something. But that being said, let's say I wanted to open up right around 19,600. So I did 19,601 or something, or 603, right? You're putting that price in, and then from that just means that if it comes down to that exact price, because most of the time you're doing these trades just like a spot trade, you should have an area you're targeting, and you're not usually opening at that very second, right? You're not hopping on here super quick. You can if you had an alert go off or something. I don't know how you trade personally, Sky, when you do spot, but normally, sometimes if I'll have an order already set, I'll have an alert go off as well so that I can hurry and check it. But sometimes I want it to, when it hits that level, to go ahead and open up my position. How do you do that? Just out of curiosity, Sky. When
I just do everything manually. I just live trade. I'm not sure
you
what.
just live trade? Okay. No, I just meant when you're like open up a spot position. If you were eyeing to buy Bitcoin to a certain spot, do you just have an alert go off and then you go ahead and just do it right then, or do you already have an order in place? Is what I guess what I meant.
Oh, yeah. So I understand. Yeah, no, I have limit orders in place because usually I do long-term tracking on these big trades, and so if it's off by a couple percentage, I usually don't care because again, I'm not usually doing leverage or anything. But I can expect that it should hit that zone, right? A kind of a zone, not an exact number. And so if it's in that zone, I'll have maybe one or two limit orders ready to go. And otherwise, if I'm in front of the screen, then uh, I'll obviously just manually enter it, and probably will get rid of my limit order, to be honest. And then, of course, I'll immediately set up a stop loss. So let's say that you have your entry here. How do you do your risk management? How do you calculate?
Well, just for this example, just kind of finish off before we move on to the next part. Let's just go ahead and so we can actually get like a live trade. Well, it won't be a live trade. I won't open one, but show you how I'd at least place one.
Okay.
Let's short instead. Let's say that we want to go ahead and say if Bitcoin comes back up here, we're anticipating the potential of a double top. Of course, I would track that more as it got up to that point to see indicators, so on and so forth, to decide. But let's just say, okay, instead, let's open at 20,000, just under this last tip. I can see that we've had, this was support at one point, that was resistance twice back here. It's kind of the high of our range at the moment, you'd say, right? So we're going to come over here and say, okay, well, if it gets up here to 20,713, I want to short this coin. And I'm going to use 1x, so that way, it is more of a swing trade, let's say, where I'm not too uncomfortable with it opening while I'm in the other room, or I'm taking a shower or something, because it's only 1x. And worst case, if Bitcoin starts pumping, it's not going to get out of control, right? My money or my risk management. So I'm only 1xing and I'm shorting. So we're going to do that. We're going to pick my amount. Now, this is a little tricky sometimes because it's telling you in BTC here what the amount is. And so you're picking the amount of BTC that you're actually wanting to trade with. So let's say I put 0.0 It tells you down here how much you would be putting in out of what your position size would be if you're trading with that much Bitcoin. This gets a little confusing to explain. I don't know. Do you have
So
a better
that's
way
how
of
much
explaining that,
Bitcoin.
Sky?
That's how much Bitcoin you want to buy, basically. I mean, your
Correct.
position size of Bitcoin, basically.
Which clearly you can see down here, it's telling me that 0.03 Bitcoin right now, which this is 1x, would be $600. I don't have that kind of money to be trading with, so I got to find a small number, right? That's amount
Right.
I can trade with.
So
So I'm going to
even
put
though
0.00.
you guys are shorting, so usually I think when introducing leverage, it's probably better to start with long examples, just because new people are only used to spot long. But it's basically your position there is the equivalent of what you would buy if you were going long. It's just you happen to be going short. So it's almost like the
Correct.
chart got inverted, but you're still buying that position. It's just you're looking for the number to go down instead of up. That's all.
Correct. And because we're using 1x, that does make it kind of the easiest to do the math, because more or less this is saying that 0.001, if I was buying Bitcoin at 20,713, that's how much, it would cost me $20 in this case, right? To buy 0.001 worth of Bitcoin. If I was at 2x, you could just take this same number and it would be basically in half. It would only cost me $10. Let's change that to 2x just so you can see that live. It would only cost me $10 to buy that. My position size would be worth that $20 because it's 2x, right? Every percent's worth an extra percent. In that case, it's worth 2%, and so on. So if I go up to 5%, now that's going to take that same and just, that's kind of how that works. Now I'm only paying $4 for a position size of $20, right? So hopefully that makes some sense. We'll go back to 1x, but like Sky said, think of it in the same terms as if you were buying. It's
Yeah.
just you're rooting for the market to go down, or that in this case Bitcoin, right? Did you want
So
to add anything else to that?
yeah, it's just a little bit counterintuitive. So if you were thinking about it long, it would just be the straight number, right? So the two different costs at the bottom there, right? It has buy long and sell short, right? So they change according to which button you're going to press, right?
No, you can see they show the same thing right now.
Oh no, I was going
$20.
to say like if you did 0.002, sorry, if you did 2x, right?
On both, right? So I do 2x on this one, and then I go over here, and if I was going to be long in the coin, do 2x. They'll always stay the same.
Yeah, I'm just emphasizing that you have to change both of those buttons. That's the mistake that you made before, right? So if you're not seeing your number go up, just remember, you have to look at the different columns, okay? Like they don't set this up easily, right?
Nope, nope.
Nothing about leverage is intuitive, guys. So just to make sure you are always double checking your numbers very clearly, and if you decide to go long, you decide to go short, just really be careful about which column you're in and all the settings for either shorting or longing. Okay,
Correct. Make sure you're matching up your colors, and if you're colorblind, I guess match up your
right?
lefts and your
Because the
rights. And
first
if you're dyslexic, I don't know what to tell you, but
because the first cost that you're going to read is going to say $10, $10 if you didn't, if you didn't just look all the way to the right. And I'm sorry to like underscore that stuff. It's just like small mistakes that like everyone makes, in the beginning.
yep, I agree. I guess what you're saying, just to kind of show live, and I'm pretty sure people do understand, but let's just say I wanted to long right now, or I wanted to, yeah, let's say I wanted to short right now, actually, and I had the short at 10x, but I'm looking over here at this long, it's giving me this price. I think that's all I'm paying $10 or whatever, but it's different, right? Because
Right.
it's not this is
That's
what I didn't
exactly my
change the
point. You
right
have to
thing up
double
here.
check. Yeah.
So we're going to put this back to one. I'll put both back to one just to kind of go on with the example, but I do appreciate you kind of taking a second there to explain that, just because that is going to be one of those things that's going to get somebody wrecked just by accident, right? Just getting a little too click happy. And that's why I like to make sure whatever you're doing, just make them both the same so you can't make that mistake. If you're planning on shorting at 5, go ahead and just put your long at 5 too. That way you can look up, you can see these prices the same, right? So before you move on from this part, make those the same, then move down and say, okay, these are the same. Now I'm going to pick the amount of Bitcoin. Do you want me to go into any sort of way to calculate that at all, or did you want to mention it, or
Yeah,
just
you
tell
know
people to
what?
go
Why
ahead?
don't we change it to 2x just so that we have a very simple calculation for how the
Okay.
numbers get distorted, right? Like, so how much you're actually going to pay, like if you lose the bet here, right?
Right, right. That's a good way to look at it. It is a bet, right? Essentially, hopefully with some TA to back it up. But it's like a gamble when you're leverage trading or stocks in general, right? Trading. Okay, so what did you want me to do then, Sky? Go ahead.
Well, I just think for anybody who's not, ever experienced anything like this before, they've only just bought things, right? And then it either appreciates or depreciates. Just that's kind of like a very intuitive understanding. But let's just say that you entered a size of let's just say 0.001. Okay, just like let's keep it around that kind of $10 range, and then you were to enter this position, like just go through the rest of the trade, but we're now on 2x. Okay, we're now on 2x. So just to move us forward on this, how do you calculate your risk first of all? Like, how did you determine that this was a good, position to take, a good bet to take?
Well, of course, we would be doing more TA as we got up a little closer to here to again to see if I felt like Bitcoin was showing signs of a reversal here, and especially if it was showing signs
Oh,
at this
sorry.
previous resistance.
Let
Is
me
that what you meant?
let me just clarify a little bit. I mean, how do you calculate your risk to reward?
The same way I would a spot trade. Honestly, it's just essentially that's. I don't. Know if that's going to be the right answer that you'd be looking
Oh,
for, but
do you use the risk to reward tool in a trading
I
view
I
ever?
I don't. But maybe it would help if Sky would actually give his answer on that. My risk to reward is just basically based on what amount I'm risking as far as my account. In this case, I have $200 in here that I was trading with. Let's say that's all I had. I was always taught never risk more than maybe 2% of your portfolio. And one thing that to maybe answer your question a little better, and this takes getting to the next step to answer, but the amount that I'm going to be risk is going to be based on my stop loss, right? Because I might put in $30 out of this $202 that I have.
That's
Well, clearly
correct.
that's more than 2%, right? That's a lot more than 2%. But maybe my stop loss within this 2x leverage would be, let's say my stop loss is only 3% above this entry. So say I've determined with my TA that 3% above 20,713 is where I want a stop loss. Well, because I'm using 2x leverage, that would make 3% a 6% loss, right? Because you have to think of whatever leverage you're using, it's going to magnify the actual percent you came up with by that number. So in this case, 2x. So my 3% risk is actually a 6% risk of $30. So now, if you can do some quick math for me there, Sky. I know you're a mathematician. What would be about 6% of $30? Or am I putting you on the spot? Just kidding.
Sorry, what is it? Are you talking about
Oh, just
$5? $5?
no.
Five
Yep, yep.
times
Like
six should be 30, right? So
correct, correct. I was just messing with you. But anyway, so yeah, so we'd be risking, $5, which $5 out of $200, that's a little bit closer to what I would say is about, it's more than 2%, barely, right? $4, I think, is 2%. But anyway, it more would fit that category. So you have to be thinking ahead of time of what I base my leverage on that, because if you're going to swing trade, for example, if you would probably be more comfortable with a little bit higher stop loss, right?
So the
Because
one
you,
thing that I would want to just inject here really quick, and just to make it really simple, okay, is
yep,
that
yep,
if you have a stop loss and it's up to you how much you're willing to risk, right? So your stop loss is basically, let's just say that the price goes up instead of goes down. So your stop loss is going to get triggered if it goes up by a certain amount because you're shorting, and so you want the price to go down. You're going to make money shorting if the price goes down. But if the price goes up and it hits your stop loss, then you're out of the trade. You can't lose any more money than your stop loss. Okay, and so there should be a certain risk to reward that you are entering here. So whatever your stop loss is, just I find that a lot of people have their own preferences. That's why I was wondering what yours was. But something like 3-to-1 ratio, right? Like some people like a certain ratio of what they're risking versus what they can gain. And so if your stop loss is like 1 unit of risk, whatever that is for you, whether it's 5%, whether it's 10%, however much that you're willing to risk, like in an extreme situation or in a very conservative situation, that's up to you. But then there should also be some type of reward that goes with it, so that if your TA is good, and if you are winning the majority of your trades, then on average, even if you lost some trades, because your reward is a certain factor higher than what you're risking, then on average, you're always going to be ahead, right? And a lot of people don't manage their risk correctly. Maybe they have a risk to reward of 1-to-1, and they're only like hitting like 50% of their trades, or they don't really control their risk to reward ratio. And often,
you want me to throw an example out here real quick with what you're saying then?
yeah, but
So
just a second. I was going to say
yeah, yeah,
that
yeah, you're good.
you probably shouldn't be taking trades that don't have a specific risk to reward ratio that works well with the percentage of good trades that you get, right? Where you have successful results. So in general, let's just say it's like 1-to-3, right? So your risk to rewards is like 1-to-3. Then that means that your stop loss, I mean the target for your take profit should be 3 times as far away as your stop loss, right? And you probably don't want to be violating that too often, right? Unless you really have to get out of a trade.
Yep, yep. And this is just kind of just the exact example you just gave. So what he means is, let's just say we decided to long. You said sometimes it's even easier to teach longing, so and I can agree with that. So let's just say that instead I planned on opening a trade at this intersection between where I think if this pulls back, it's going to bounce on this lower trend line. I'm just going to respect it, right? And that's where I'm going to open the trade at, say, roughly just under 20K. I have my stop loss, which I've indicated here as about a 0.6% stop loss. And my plan would be to ride it back up at that point to this resistance level, right? Which would be about a 1.8%. So what is that? 1.8 is 0.6 times 3, right? So that would be a 3-to-1, ratio there, where my profit is 3 times, my potential profit is 3 times what my potential loss would be.
Right.
Does that
And
kind of
now,
help?
yeah, absolutely. And so if you were taking that trade, it would be a good risk to reward ratio. Your reward is 3 times, higher than what you're actually risking on that trade. Now, there are some people who would say that's too risky of a trade because I could get stopped out. What if there's a scam wick or a liquidation wick that just dips below the trend line? And so a lot of traders will actually want to put their stop loss below the previous swing low, right? Or below the previous wick low, whatever it might be. And because they know that the price action doesn't tend to go lower than those wicks, but those wicks have already proven to go that low. But if you put your stop loss that low, then your risk to reward ratio now becomes really bad, right? Because now you're having a 1-to-1 risk ratio, right? Like drag that down. Like drag it
Well,
down.
and I'll even add to, well, I'll let you finish your thought and then I'll add to it just so we can kind of
Yeah,
see what
so
you're
now
saying.
you could see the potential loss that you could have is greater than the potential gain that you could have. And again, when you're like magnifying these things with leverage, it can be disastrous, right, for your portfolio over time. So you really have to manage your risk to rewards, right? And you have to
Right.
understand that the setup that you're getting into for a leverage trade should be a really ideal setup. It shouldn't be something that you can very easily question whether or not that's a good one, right? Because when you're spot trading, a lot of the time you can just kind of intuitively understand and kind of eyeball where things are going to go, but or have a feeling for the market. But again, when you're leverage trading, everything is just magnified in intensity, and so that risk to reward ratio becomes even more important. Just wanted to throw that out there.
No, and I 100% agree. And just to his example there, if you drug that down here, this would have to be a completely different type of trade at that point, right? It'd be a lot similar to taking a little bit more of a swing trade for this risk to reward to make any sense. So this was, our level of previous resistance that we're hoping, it broke through here is going to be hold up as support. We're zoomed out and we've determined that we think, okay, Bitcoin is starting a uptrend within the macro downtrend, but we believe, with our TA, and that's the key here is if you don't know how to spot trade or you don't have a decent success rate spot trading, when I say decent, you need to be winning the majority of your trades. You don't even bother with leverage because if you're losing the majority of your trades with spot trading, you're going to lose the same ratio but more money trying to leverage trade, right? So
And you
that's
see
kind of where we.
that and you see that wick on the downtrend, on the top of the trend to the downside. It's
Yep, over here.
before. No, 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 at the top on the
Oh,
down
just up
on
here.
the
You
no, no,
talking
no,
about this wick up here?
on the downtrend that you're on the uptrend.
Okay, yeah.
So at the
This
top.
wick here. Yep, this wick
No, no,
here.
no, no. All the way back.
Clear
All the
up
way
here.
back.
Clear up here.
Right there. It's breaking above the trend. Right there. You
We're
go.
talking about the bull trap here. Yeah, little bull
Yeah,
trap.
you got a little bull trap there. You broke above that downtrend, right? And so you can see
Right.
the channel. Sometimes you get these wicks, and again, I'm just talking for newbies here, right? For the really
Oh,
entry level
of
guys.
course.
So sometimes you may have a nice trend, but then you get these little kind of scam wicks, these little like wicks that just poke out from the channel, and they can liquidate a lot of people. That's why your stop loss isn't just put at support, right? That's why your stop loss isn't just put at resistance if you're shorting, right? And if you're longing, it's not just put at support. You put it below support, and you put it below what you would typically think would be where a scam wick would come about, right? And so you can kind of take a look at the chart and see, how far are these things wicking up or wicking down, in the recent history of trading, and then you can determine how far to put your stop loss down. But the reason why you don't want to just put your stop loss right at your entry price, or just right below your entry price is because there could always be this little scam wick, right? And that's what we're talking about, where the market tries to liquidate you. And so, you want your stop loss to be as far away as possible, right? Without it violating your risk to reward ratio, and without you losing your shirt if it was hit, right? So some setups are just going to be like very wicky, right? They're going to have like a lot of weird scam wicks, and some trading areas are not going to have clear channels, and so those aren't always the best setups, just in my opinion.
Nope. And then, if this just kind of add the last final to that thought would be, yes. So if you're taking a trade like this and you felt like you needed to put your stop loss down here, well, now it better be a trade where you had planned on your target being up here because now that at least would fit your ratio. Because if you still were opening this trade knowing that you felt like your stop loss needed to be here in order to avoid the potential scam wicks, but again, your target was only back up to the top of this range, like he said, that'd only barely be a 2-to-1. Now, if that's all you think, if you think that's good enough, within your personal risk management, then take it. but maybe it isn't. Maybe you're a 3-to-1 and only guy, in which case, it would help to not take that trade.
Well, and
Right.
also as your trade progresses, let's say that it doesn't scam wick up right now, it could scam wick on the next candle. So even though let's say that it is launching up, it's going in your direction, one thing that you can do is you can move your stop loss up. You can move your stop
Correct.
loss up as your trade progresses. So, can you enter a stop loss for us? And just so let's say that we have this trade and we're going long now.
Well,
Okay.
let's go ahead just for this example. Let's go ahead and open a trade. I know that's not really the most responsible thing, but I'm only going to risk like $2, right? And we're going
Okay.
to do a long. We're going to do 2x. I'm going to choose an entry. I'm going to do limit. Now this is also useful because this is going to show you once you are experienced. This is how I open longs and shorts. Because most of the time, or some of the time, I should say, when I'm opening them, if it wasn't where it triggered my already set limit order that was up higher or lower, right? But let's just say I got an alert that went off on my phone and I want to trade right now. Well, what I'm going to do in the case of a long, I'm going to go up in the short side of the order book and click one of these top 3 that are all about the same price anyways. And they're only barely above the price in this case of Bitcoin, 20,401. Of course, it's fluctuating constantly, but I'm going to click one of those. Down here it says $10. I'm going to change that to 0.005. So it's only like, oops, hold on.
You're actually dropping.
I guess that's the low. Maybe that's the lowest. I haven't messed with this enough to know. Maybe that's the pretty close to the lowest that'll allow me to do.
You're at
And that is one thing
390
to
now.
remind.
Just
Oh, I'm going to change it. I was just pointing out that the price down here wasn't letting me trade any less right now than $10. That I don't know what their exact limit is on this exchange, but there are limits on exchanges as far as how little you can trade with. If you want to trade with $1, most exchanges won't let you do that. So I'll use $10. We're going to go back up here and click this again to get a more recent price, right? And then I'm going to go ahead and click the long button. It's going to ask me to confirm it, which is nice. At least you do get a chance to, if you've screwed something up, reread it, blah, blah, blah. Now, if it fills it right away, it's going to show up right here under position, right? If it didn't, because say during those couple of seconds, I was clicking $20,399 and whatever cents, and it's above that now, it's not going to fill that order, of course. It's going to be sitting here under my open orders, right? So this position did fill right away. So now you can kind of see an active trade. And here's kind of what it shows you, Dan. Can you see that okay on your side there, Sky, just before we go on?
yeah, I can see everything clearly. And so, are you going to
Okay.
enter a stop loss, or what do you do after you do that?
That's what we're going to do next. So now one of the other things I'll add, this is just part of risk management, but you never should enter a trade without having your entire plan in place. So of course, this one, I broke my own rule because I just decided to open a position randomly just now for the sake of the video. But I think we've covered enough that you obviously would have a exact spot you plan to open a long or a short. Let's just say that was what I did, and this was exactly where this was my ideal opening at the open price of $20,394.50, right? But I also would have wanted to already know where my stop loss was going to be. I don't want to be coming up with these things on the fly because that's just not how successful traders are successful. You wanted to know where your targets were, or target. If it's just one target, fine. If it's a series of targets, fine. Have your whole plan in place. And this is what the plan entails to kind of answer Sky's question. So if I wanted to do my stop loss, now we just longed this. I'm going to go a little bit below support. I'm looking back at these wicks because I could see the last time that this level was support, it wicked down as low as 20,257. So let's just go ahead and go down a little more. You could be up to you. This is all dependent on your own risk tolerance. But I guess just as tips, you could, depends on what I'm going to end up doing for my target, but you could either use this most recent area where this broke out and go below that to say 20,000, like 116, or I might be using back here, which is the last time price action interacted, with this area. I'm going to go ahead and do this more recent one since that's the most recent time I interacted with it. And we're going to go 20,116, right? I'm going to go over here to where it says stop loss. We're going to go up here. Let's see. This is where you do it. Hold on. Cancel that. We're going to click stop loss. Do not remind me again. It just gives you this little message about your stop loss. You can click you understand. If you on your own time, I'd recommend reading all these things. There's always something useful about it. We just, for the sake of the video, we won't do that. But now it's just telling me my position is currently a long at 2x, right? I want to go down here and enter the amount of Bitcoin that if this stop loss gets triggered, that's going to close. I want to close my entire position. Some people, I don't know, my personal preference is to always just close an entire position if it hits my stop loss. I don't plan on closing half of it out and then, re-entering later. But you could, if you were more advanced and you were trying to DCA in or something and you were okay with leaving some of the position open up there in case it is just a scam wick, like Skyfi, maybe like Sky mentioned, and maybe it's even a bigger scam wick than you expected, but you didn't want to lose the entire position. Maybe you say I only want to close half the position. But for the sake of this, let's just say we want to close this entire position out. And I said, what was the price that I said there? Do something 116, right? Like 20,116. I'm going to enter that price up here, 20,116. I want to change this over to, it stays on market price, but this is when I click confirm here.
What's the bar underneath? What was the bar underneath your price?
Let's cancel it. Cancel it and go back up here.
So this
bar.
Was that just the, that's just your X?
Oh, you know what? I'll explain that real quick. This is not something I use, but I did look it up kind of just so that I could, if you ask that question, I could kind of have a better idea. So let's go ahead and put this back to 100% close. Let's put 20,116. If I leave this at 20,116, it tells me down here that my expected return would be I lose 3%, right? And when the price hits that level, the position will close at the price, so I will lose 3%. This is me saying how much I would potentially be okay losing. So let's just say I let this determine my stop loss for me, because I'm one of those people that just always chooses 10%. I don't recommend that, by the way, but say you did. It's telling me if I drag this to 10%, it's telling me that this price is what Bitcoin would have to go to for me to lose 10%.
Okay.
For me to, let's say I was okay with losing 90%, which of course we're not, but
right. So if you're somebody who uses, 15% stop losses or 10% stop losses,
and you're just disciplined with that, and that's just how you trade, drag this to that percent, and it's going to automatically put the
like a lot of people use 5% stop losses.
Yep.
So okay. So I understand what you're saying, but your method of using a stop loss is just you're using the wick, the support level kind of wick low right there.
Yep. I'm using my own personal preference on stop losses, still trying to take into account wicks. And I haven't back tested for more than a few months worth, but.
Then also on that same page, there's the ROE button. The return on return on, what is that?
Return on, I that just basically means what you made. Return over or something earning. I can't remember. You can Google it maybe and throw it in the comment section or something. But it's just a term for how much you made or lost. And so return on, I don't know why they would put ROI, because it means the same thing as return on investment. I think is just basically I would lose 5%. This is what it's probably saying right there, right?
Oh, okay. Yeah, so it's probably return on equity, I guess.
Well, that would be more useful if you were picking your own stop loss, right? So if I go back here to the price and I put back in my 20,116, which we're going to use for this example. Well, now when I go over here, it's telling me that's 3%. In case I couldn't just look down here and put my mouse over this, it's just another way, I guess, of it. It's just more ways of finding the same data, I suppose, which that's nice, more spots to find out the same thing, I suppose, is a good thing. It even says down here already 3%, but you'd be losing 3% of your equity, like you said, out of my $202, I think. So is that kind of what you gather out of it as well?
Oh yeah, and we're just learning this stuff, so I appreciate it.
Yep.
And then, have you ever used a trailing stop loss?
I have never used a trailing stop loss. No,
so it looks like this one has an option for trailing stop. If you look in the upper right-hand corner.
I did see it. Do you want me to pull it up just so we can mess with it?
Sure. I mean, why don't you confirm this? Yeah.
Yeah, I'm going to go ahead and confirm this just so you guys can kind of see that it'll put it under open orders. So you always want to double and even triple check everything you do when it comes to leverage trading. I could have accidentally typed in 20,000, 06, and that made it too much for my risk tolerance or something, right? Lose more than I meant to kind of thing. So come in here to your open orders, make sure it's there. What is it doing? Oh, it's not showing current. I guess this is my first time coming in here, but open orders for take profits. That's why. Okay, sorry. Take profit and stop loss orders. There's little sections here. And so this is showing me that, this is the open position where it will stomp me out or hit my stop loss if the price reaches 20,116. And then we already determined from that previous screen, I'll lose 3%, or whatever. So now we're going to go back to position, and there's this trailing stop limit. And we'll go ahead and read this real quick. It says a trailing stop limit order is a type of strategy order that will submit the order preset by the trader to the market when a market correction occurs. When the market price / market price hits the 1+ callback rate of the upper lower price of the strategy set by the trader, the order will be placed at the best market price. Be reading that out loud. Did you gather anything out of that? Of what it's
well, I mean, my understanding of a trailing stop loss is that it just moves at a certain pace up and
Yep,
down
yep, yep.
depending on
So we're
what
gonna
the
go over
price
here
of the
and see.
market is.
I've never used it, so maybe between the two of us we can kind of get this figured out. And if not, we'll do a follow-up video at some point, maybe a more advanced. I don't think it's a bad idea to do this beginner one and then maybe do a little bit more advanced one
Yeah,
where
this
we
is just an introduction.
correct. So we're gonna go over here and say that okay, the trigger price, what would trigger the stop loss?
So probably the price that you already wanted, right?
20,116. The callback rate, I don't know what that means, but let's drag this and see what it does. I feel like we'd have to Google this to have any clue what it means. I've heard of this term, and I know a lot of traders that do use this. Well, I can't say I know a lot. I know like one specific guy that talks all the time about using a trailing stop loss, but I've never asked him how to do it, and I've never done it myself. So apparently you put in whatever this callback rate is, which it says is the callback rate along with the historical upper lower price is the basis for calculating the actual trigger price. Okay, so when I'm dragging that, must be seem to be changing my number up top. So we'll have to learn what that is, I guess, and have a follow-up video on it. Would you agree with that? Because
Yeah, so
I'm not
it's just
making any sense
interesting.
of it just looking at it. Yeah, it is interesting, but I don't really know how to do it. But maybe I'll make just a specific video that you can also share on your channel that's just that. Because I'm sure when we get done with this, I can Google it, find out exactly what that means, how to do it, and then it'll probably make a ton of sense. But otherwise, one other thing that I've noticed about this exchange that is the same as KuCoin, which is very odd, and I just want to point this out real quick before we move on, is that like KuCoin, if you're going to set a stop loss, you can't have a stop loss and take profits at the same time on KuCoin. Well, at least within the spot trading system, without having you have to do stop limits for your sell orders too. Do you use KuCoin, or what exchange do you primarily use, Sky?
I use KuCoin.
You do? Well, this I guess what I'm trying to say though is you can't have multiple. That's what I meant to say. You can't have multiple, which is very odd to me. I don't know. And once again, they probably just because they don't want you to, they don't want it to be too intuitive that it's too easy for you to make a lot of money, I suppose, or whatever. So I always have to just set alerts. This is something I've looked into, and I do believe that it is accurate that there isn't a way to set multiple take profit levels on leverage while having your stop loss in place. I go here and I hit take profit. This is going to be now where I've decided that I want to take profit, right? And it acts like down here that you can do percentages, but it makes you cancel your stop loss. I believe we'll try it real quick just to see though. So right here, I'm going to say that we're going to go back real quick though first and go, okay, I opened up the trade right now. I want to take profit. This is not a good risk to reward ratio, by the way, but let's just say 20,835. I want to take profit. So I'm going to type in right here, 20,835. And it's going to tell me my expected rate of return is 4%. So again, not a great risk reward ratio because I was risking 3% to now make potentially 4%. That would be very close to a 1-to-1, right? Which is not what we aim for. And then I'm going to go down here and say, okay, available. Now we'll try it just in case I was wrong. I think this is saying how much of my overall position. Let's try to set one up for just half. So 50% of the position close. At that point, I'm going to confirm that. It says confirm to entrust. You're just confirming that the trigger price of 20,835 will be where this 50% of this position closes. I'll click confirm. And now under open orders, I have my stop loss still in place and my take profit. I'm hoping that I'm wrong. KuCoin won't allow you to do multiple, which is very odd. And maybe because this is my first time doing an actual live trade. Just FYI, this is my first actual live trade on BitGet. And so we're going to go over here to take profit again. And we're going to go, let's go look at our chart one more time. Okay, if this breaks out, I'm looking back over here at this resistance, this wick here. Okay, maybe 21,133. I'm going to go back over here to position, take profit, 21,133. I want to close out. Yeah, it's not letting me do anything. It says to quantity. It's not letting me drag that for whatever reason. So I think that's because of the fact that it won't let you do that, which doesn't make sense to me, that you'd let me pick 50% and yet not be able to have another position open for the other 50%. I do know on KuCoin when that happens, once it triggers that first 50% and that order goes away, this one that we created under open orders, right, where we were taking profit, then I can then set another order. But for whatever reason, and I wouldn't be able to tell you exactly why that is, and I'm not able to. So, but that's how I would do a take profit. Let's go ahead and cancel that, and just really quickly, just for demonstration purposes, let's do the full position. Then let's go over here to position again. Let's go take profit. Let's type in, we'll just do the last one I did, 21,113. We're going to go ahead and drag this to be the full position, all 100% of it, and I'm going to confirm. And then the next step in any trade, once again, going back to your plan, and this is something that Sky alluded to and even gave somewhat of an example at one point. I am my own trailing stop loss, I guess, in a sense. But what I do is I have an alert set to whenever I get to a certain percentage in profit. And that's all relative to the type of trade I opened and what leverage I'm using. But let's just say for this example, I'm using 2x. And once Bitcoin gets up to maybe this top of this red wick here, not red wick, but red candle. And so it's at 20,000, say 585. I've determined that's a point where I feel comfortable with just trying to break even. If it comes back and revisits that area, maybe I set another alert and I reconsider opening the trade all over again, right? This is just something that I often do. So I'm going to go ahead and say if it reaches 20,000, 85 or whatever, that I want to move my stop loss up to break even. So just imagine that we're already at, break even. I could go back over here to my open orders, cancel this current stop loss, this one down here in red that says SL, which stands for stop loss. Go ahead and cancel that, come back over here to my position and do a new stop loss at break even, which my position opening size is 20,394.50, right? So I'm going to go stop loss. We're going to type in 20,394.50. And then I'm going to go ahead and drag this to the full 100%. And now at this point, I can't lose money, right? Even during this demonstration, we've been lucky enough that I just randomly chose, I guess, a good time to long as we are going up, right? At least I'm not losing.
We made you some money today.
I might be able to retire. Just
right.
But at any rate, now, even during this demonstration, no matter what happens, I now have locked in that I can't lose money. Now, the next thing you might do, let's say that I did want to only close 50% at this position. And that's all that BitGet would let me do anyways, was one order of 50% for take profit. Once that hits that and I have an alert go off on my phone or something, if in case I'm not sitting at the computer, at that point, it's closed out 50%. And I want to move my other 50% stop loss into profit. So at that point, I might come up here and say, okay, I'm almost treating it as a whole new trade at that point, right? Where I'm thinking, okay, well, this is going to get rejected. How far do I think it goes before it potentially just puts in another higher low and goes up? I might say, okay, 20,557, I think is a good spot. And at that point, you would just then redo your stop loss, right, to that number. So, yeah. Any questions that you've kind of thought of so far as I've been talking there, Sky?
No, not really. I think I would just like to let you conclude your thoughts on how you would introduce people to leverage trading.
Well, I'll kind of go over just maybe the last couple features, I suppose, before I finish my thoughts up. There is this one that says reversal. I can't think of a scenario where I personally would use this, although the guy that taught me trading, or I guess you could say my mentor, he's huge on bull traps and bear traps. I'm sure.
But explain what it is, though.
Oh, sure. Actually, would be a very good example would be the price action that you were asking me about earlier when things wicked above here. And where you could see this almost better, let's say you were making this trade of this falling wedge, which you wouldn't have known it was a falling wedge, I guess, at that point. But let's just say that for whatever reason you had this line drawn and you were planning on opening a trade if it broke above this. Well, clearly it did here, right? It broke above it and then it lost it. Or maybe even a better example would be this little red wick that most recently happened, where you see back here. I don't know if you can see this very well on your screen. I apologize if you can't. But there's two red wicks here where this bottom white line I have drawn previously was resistance, right? Well, just recently we wicked above that. We went from 20,753 up to 20,908. I realize that's a very, very small percentage, but if you were leveraging, that could equal quite a bit. And, maybe your plan was to then open the trade right here on this retest. Well, it didn't hold up, right? It broke that level, but it didn't flip it to support. Maybe I can draw that better with the little pen or little drawing tool over here. But you can see that it broke above. You would have wanted to open here, say, and then ride it up to this next resistance, but it clearly lost that support. Well, that's what we call bull trap, right? This is a bull trap because what it essentially does is it traps anybody that was a breakout trader planning on opening a long position, right? And often when the bull traps happen, the price or bear traps, the price action goes the complete opposite way. Down here at the bottom, let's say we do Alt H, put a horizontal line. Here could be a decent example of a bear trap where maybe the support level, got lost here. and then it was coming up to retest it. And I know this is something that some of the traders in my other trading group were looking to short. And I don't know which one of, how many of them took that trade. It's a very large trading group, so I'd have to imagine a decent percentage of them took it. Well, let's hope they managed their risk well, because this ended up being a bear trap, right? Right, Sky? Because it lost this support, but regained it. And, we've actually were up a decent percentage overall since that price action back on mid couple days ago. So at any rate, that's what a bull trap and a bear trap is. It just traps whatever direction, you're losing a major level or gaining a major level. And then, it's going the other direction against what maybe your percentages or odds would suggest. And so I kind of lost my thought as to, you asked me to explain that, but I think I was just trying to say that, remind me actually what I was talking about.
No, you were going to describe what is the reversal function.
Oh, yeah. So let's just, he's a big on bull traps, trading bull traps and bear traps, and this reversal is just where it'll close out your position you're in currently and automatically open up a position the other direction. It uses market though, which once again, if the market's volatile, I would not ever recommend using, because you might not be able to control exactly the price you get. But if the market's not super volatile, which recently it hasn't been, Bitcoin's been more or less very, very boring. That's why we're talking about moves of like 0.3% and getting excited about them on our channel sometime, or 3%, right, Sky, or 5%. And we're like talking about it as if the new Jurassic Park just came out or something. It's just, that's kind of what we're been resorted to. But that being said, you could click that button, and right now where I'm in this long position, it would close that out. And, maybe I was even lucky enough to open it down here or something to where I'm in profits. It'll close out, give me my profits, and automatically open me the same size position, same everything, but as a short in this case, right? Or if you were in a short, it would open you up a long. So
and
that's
the only thing you would have to
either.
The only thing you'd have to remember to do is reset a different stop loss.
Yes. Then you'd have to start the whole trade over again. That's why I say I wouldn't use it, because
And then they also have the flash close button, which I guess
and
is
that
just
to me
like
is just like market close, but
I think that's just like an emergency, like a bailout, right?
well, I guess, but that's the funny thing about, I guess it's just one way of, instead of having to click market over here and actually click the amount of percent, or whatever, because that could take you 4 seconds to do, right? Or even maybe 30 seconds if you're slow. Yeah, it's doing the same thing, but it's just doing with one click.
Yeah, I mean, I've seen Bitcoin move like 10% in 15 minutes, so I guess that's a handy function to have. So
yeah, it's handy if you're like, you forgot to set a stop loss, which is something you should never do, but say you did, and in the event that Sky just mentioned, the trade is drastically going against you, or some news just came out, your alert popped up on your phone, and Elon Musk just said that he sold all of his Bitcoin and that Bitcoin's the worst thing ever created, right? What's that going to do to Bitcoin? Well, hopefully not much these days, because Elon doesn't seem to have as much influence as he once did, but it's going to do something, right? You might hurry and hit flash close because you don't want to risk whatever poor Elon's about to do to your portfolio, right? Or to your trade.
Yeah.
Anything else, my friend?
All right, MiCA, we actually had a little bit of a technical difficulty right there, so we did stop recording. But I think it's a good place to just sign off, because this video is getting a little bit long at about an hour and 15 minutes. I really appreciate, both of us coming together to make this video and just share, with the audience about how to use BitGet for leverage and shorting and stop losses, risk management. I think in the future we should make a couple more videos to perhaps explain some of those finer nuances. How'd you feel about it today?
Overall, I felt good. I think you probably agree we went a little longer than we intended, but hopefully there was some value in the length and some of the things we talked about. And like you said, I kind of look forward to maybe doing some other videos in the future. So I'd add that in there too. I'm sure you're about to, but leave some comments for old Sky here and Alpha Commission, and let them know if you liked something like this, because I wouldn't mind doing some other, and maybe even give us some topics that you'd like us to do videos on. That'd be cool too.
Yeah, and you guys can join us over at the Alpha Commission Discord if you'd like. Again, there's the link down there. I'm also going to put a link to TA with MiCA. And you have some type of a Telegram, don't you?
I do. Just a free group, kind of similar to your Discord. Not a whole lot going on there, but yeah, I can send you that link if you want to throw it in there too. definitely get more value, I'd say, out of your Discord currently. But if you want to come check us out there too.
Okay. Well, maybe we can grow together. It is a bear market, so more
True,
people
true.
are staying home. So, how far up are we on our long here? Actually, this Bitcoin's just been pumping.
I wish I would have left it open, but we
Can
actually
you
closed it out. Yeah, we
can you
closed
get
it out.
the measurement tool? Let's see how much Bitcoin's gone up so far. Just the
Yeah.
ruler.
What
Just
did we open it at? I don't really. It was 20,000. What, 300 something? Or I
well,
can't
yeah, you
remember.
did right at
We opened it
support.
at the support. Yeah,
You
we opened it at
literally got it at
support.
support. Yeah.
It's up 1.5% right now, which we were only using 2x leverage. That'd have been 3.2%, but it actually at one point was up over 2%. Imagine using 10x leverage. That'd be a 20% trade we could have just
Yeah.
made right
All
there,
right.
right?
So yeah,
Pretty cool.
the proof is in the pudding. You guys can use leverage, but always manage your risk. If you guys are new with it, then start with just perhaps the 1x. Don't go too far over. 1 to 3x for sure, and make sure that you listen to what McKay said in terms of having your entire plan for your trade. When you're using leverage, it's very easy to get wrecked. It's very easy to get liquidated. And of course, you're going to want to know, you know, you're going to want to plan your entry very precisely, have that limit order in place, make sure you know where you're going to put your stop loss, and then, of course, manage your stop loss, maybe raise it. If you're going long, then you may want to raise it as your price moves up to entry. And that's just something that's really responsible to make sure that you're preserving that precious capital in case the market does have a downturn. Then you'll want to be able to buy in lower, right? Or vice versa if you're shorting. Anything you'd like to add, MK?
No,
McKay?
actually, just super, super appreciate you having me on. We didn't really touch. You just reminded me we didn't touch too much on the liquidation. So as you guys are watching the video, and I'm talking about that position we have open, kind of look where that shows that price, and just know that that is the price. Where if you don't have a stop loss in place and you just allow the position to reach that, then you would lose the entire amount of money that you had in that position, and that's how people get wrecked. So we didn't touch on that, but I don't really know that it's that important to touch on now. So just thanks so much, Skyfi, for having me on, and it's been a joy talking to you.
Okay, we'll try to do this again. All right, guys. That was your alpha for the day. Stay safe and happy trading.